Yesterday I was saying how the longs had been very strong recently, and they had been very strong as you can see. Even yesterday when Jerome Powell had his conference, um, it was still bullish in the morning. I mean, despite having a fairly negative overall statement, right? So I knew at that point there was going to be sort of a correction coming. I didn't predict the correction going to be the way it was. First of all, the economic data came out stronger than expected, right? The jobless claims were higher, initial jobless claim was higher, and the 4 week average. So that is positive for the stock market. And you can see it opened up fairly high. It gapped up, went down, but it stayed above the previous close for most of the day. So timing the shorts um, was going to be in the afternoon. Obviously, very rarely does it happen right at 1300, which is 1 p.m., especially when the conference is at 2 p.m., right? So I was hoping it was going to be stay around here and then started getting in on a short position for Jerome Powell. Well, here's how they do it, okay? It starts with the attack on the TLT or the bonds. If you want to look at it closely, right here, right? On the 1 hour, it started going up. Well, let's take a look at the 15 minutes and see if we can pinpoint when exactly. When, yeah, so it's about well, I don't know how accurate this timestamp is. This says 1700. It should say 1200, somewhere around here, but this says 1145. So I'm not exactly sure when, um according, to this specific 10-year yield, when did it actually trigger? The point was it was an attack on the bonds, and you can clearly see it on the TLT, right at 1300. Boom, smack down. And the VIX went up as well, right here at 1300. So this is how the shorts attacked it. There wasn't any precursor signal. You didn't see it on the puts, right? It didn't start coming in prior to 1300. Right at 1300 was when the puts started coming in. So there wasn't anything that would indicate precursor that the shorts were going to attack other than forward looking analysis, right? Like I said, forward looking analysis, one of the three components that I deal with, the other two being fundamentals and technical analysis, is something that needs to be consider to be a successful trader. Now, like I said today, on yesterday video, that this jobless claim can be either positive or negative depending on the seasonality that's coming up. Next week, the jobless claims I expect to be fairly lower than expectation due to, of course, the holidays are coming in. But for this data coming out already, the market was up. So the forward-looking analysis will have to be with the Fed chairman, Jerome Powell, speaking at 1400, and also tomorrow Michigan inflation number, which I stated was most likely going to be higher than expected. And this comes in at 10 a.m. Then the consumer expectation, I'm expecting it, and the consumer sentiment, I'm expecting to be lower than expected. So that's going to be negative for the stock market. Both these catalysts are going to be negative forward looking. Also, it being Friday. And the technical analysis, looking at the technical analysis, let's see if we can see something. Right, here's a 60. So you can see how on this attack right here, this attack, it went straight down to the 15-minute trend line before going back up, okay, and then retesting it and then going down. So that is a technical reaction to it. The other thing I mentioned was even numbers if I pull up the SPY. But before that, I'm going to say the target right now for the SPX, the S&P 500, is going to be at the 50, at this trend line, the 50 day moving average on the hourly, right? So that's right here. What does that correspond as far as on the SPY? Let's see if it lines up. And that's gonna be around here, 432.5. Like I said, it likes to have round numbers, and you can see how the reaction has been fairly around round number 3,500, 3,400, 3,600 right here. Let's see what the reaction on the that's the 15-minute trend line. And let's take a look at this guy to see if it does match up. So here on the daily, it ended right at this technical line. Right here now it's gonna bounce and it hit this. So I'm expecting a higher opening tomorrow, at which point I will probably go short. Whether I go short right away or I probably may have to I probably won't go short right away. Maybe a initial bounce and then sell some call options, and hopefully there'll be somewhat a decent bounce tomorrow. Um, so here's the thing: the longs are still strong. I don't care what anyone says. The longs are still strong, even though today indicates. See, there's this thing about trickery and manipulation that the stock market likes to do. In fact, almost every play is about trickery. So today, this trickery came about, and I guess a lot of people would have to miss it because most people don't like to chase, especially when you have this wicked event, right? Um, Ended out, close to low of day. Like I said, when there is a sell-off, it's always normally associated with a big red candle. So there's a big red candle. These are all big red candles, right? Now, is there a chance that it's going to reverse tomorrow? Given that the prior data doesn't indicate that, anything is possible because the way the stock market works, it really doesn't, it wants to deviate sometimes from previous, events, but you can't plan that. It's very difficult to plan that. So you have to plan that it's going toward the negative side, especially with the MACD registering a red candle now on the daily. So I would say the first target is this, and then the second target would have to be this line right here, the 100 meeting up with the 200 on the 60-minute trend line. And that would put you close to, this even number if this continued to go up, which is 430, which is right here. 430 should meet up with this 20-day moving average. So that's the technical component of tomorrow. Um, Given, and then the forward looking being this data right here that are negative catalysis. So yes, I do expect a down day tomorrow, a bearish positioning. Um, Unfortunately, even though I predicted this outcome pretty well yesterday on my video, I was saying how it's going to be negative forward looking, based and being bearish for the Jerome Powell conference. It triggered too early for me to capitalize a lot of this, especially when 1400 is right here, right? So most of this I wasn't sure exactly what was going on, right? Because it's just very powerful movements, and I am risk adverse, so I don't like to deal with something that I wasn't sure what was going on. Now, there may be some news catalyst that triggered this. I don't know what it is. I have to look at it, after this video. But in the meantime, I would have to say, you know, this could be manipulation, and therefore there could be a easily a upturn tomorrow, before this number coming out. There's always a chance I may be wrong with these numbers. This being in November, I could be wrong. So that would be a positive catalyst and a complete V signature, because in the recently they liked V signature, right? There have been V signature. Here's a V, here's a V, and of course this whole V right here, right? All of this is V. Okay, so V signature are like common in this current time frame, whatever you want to call it. So I'm not gonna say it won't happen. So I won't go aggressively short, because, like I said, anything is possible. But I have to go with the probability. Probability being, toward the negative side. And let's follow up with the 60-minute. These MACD doesn't really tell you anything other than the event that triggered it, and now it's in the red. And then of course, see if there's anything else. The options didn't say anything until it was too late, right? Now the options are meaningless because this event triggered, this downturn event right here triggered all these option volumes. And so that's already after the fact, meaning it happens already. You can't use this. You can't use these option volumes as forward-looking data saying, hey, look at all these options being bought. Well, yes, it is for tomorrow, November 10th, but it was bought today on November 9th. So the option volume that comes in tomorrow, the buyers and sellers, that's going to dictate the price action of tomorrow, not the fact that these volumes started coming in today. And they all came in, like I said, because of TLT or because of the bonds yields going up. So that's how you attack, I guess, the longs, or how this is how the shorts attacked the stock market, is through the 10-year yields. Increasing it is gonna be a negative bias or a bearish positioning. So we're at a point where it's really tricky. I mean, individual stock data really doesn't mean much. I just want to look through real quick what the value fund looks like. Let me move this back over here. Uh, let's see what the value fund looks like. It's down, and of course the FANG has been strong today, right? Or relatively. So, and these are the Magnificent Seven, Apple, Microsoft, and the likes. They're all pretty strong, I suppose. Um, so when will I start adding to my 401k? Well, pretty soon. Hopefully, this will be the last downturn. This most likely will be the last downturn. Um, for the bearish positioning, and then I'll probably start adding some, but it's just I already sold out on my 401k, so I'm not gonna go back in at a elevated price, but that's just how it works. Oftentimes you do need to start adding in on the way down for the reversal, and that's gonna be now. I have to think about it a little bit more, because granted, Thanksgiving or Black Friday could be weak, right? You never know, because nowadays the Black Fridays, they're starting early. They're starting right now. So we don't know if it's going to be a strong Black Friday and a strong Christmas holiday, or it might be a weak one. We don't know. So that's something that that no one is gonna know until after the fact, and there won't be any forward-looking analysis in that respect. So um, that being said, I am having to lean shorts tomorrow. There is no other way. So yeah.